Let's go across to the next management that we have. The management at LatentView LatentView Analytics is now with us. They recently got listed on the street. The CEO is with us, Mr. Rajan. Thank you so much, sir, for taking out time for us. Could you just talk to us about the numbers on the face of it? They're looking pretty strong, but can you just talk to us about some internals, demand trends, client confidence? How are the deal pipeline looking?
Yeah, sure. We had a fairly strong quarter, and as we put out in the press release, we added about 15 new clients this year, and 6 new logos in this quarter itself, right? The quarter that just ended. At this point in time, we continue to see a fairly strong demand for our services. I've talked about whole of data analytics being at an inflection point on the back of the pandemic. So we see strong demand for multiple areas. Our consulting services, where we do a bit of diagnostic and advisory upfront, right, to help identify and set up the analytics initiatives, that is taking off in a big way. And we also see very strong demand for data engineering and supply chain work. So overall, the demand scenario ahead of us seems pretty strong.
Okay, Rajan, so demand scenario looking strong, but is this coming at better pricing? Because in this quarter, your margins have improved perhaps on account of higher contribution from the consulting business. Is this something which is sustainable?
So we see that the clients are also appreciating both the inflation that's been going up, right, in the client markets, and also the demand supply scenario that they are also witnessing, right, when they're trying to hire FTEs for their business. So they are appreciative of higher price points for the premium services that we provide. We have also been focusing more on the fuzzy, ill-defined problems, right, that we go after. So the complexity of the work, which therefore necessitates a particular kind of a skill set, is also aiding us in terms of maintaining a premium pricing.
Right. Strong client additions in Q3 was one of the key feature. But the current client concentration, can you just tell us about that? How are you looking to mitigate the concentration risk?
Yeah, so there are two things that we look at from a growth standpoint. Of course, account mining and growing the accounts that we already have is a very important component. We have mentioned in the past that about 15-20% of revenues in any year comes from new client additions, both completely new logos as well as opening new doors in existing accounts. This is a philosophy that we will continue to do. So the growth ahead of us, we see that it will get fueled by the mining that we do in our existing accounts, but we will continue to add new clients, not only in the US, where we are concentrated at this time, but going forward in Europe and Asia Pacific as well. There's a lot of work that can be done. We continue to do work for Fortune 500 companies, and there are several clients that are based out of these regions that I just mentioned. So we will continue to add clients going forward as well.
Okay, so you're seeing decent opportunity when it comes to the organic growth, but what about inorganic growth? You have a decent amount of cash balance lying at around 450 crores. Are you looking at some M&A opportunities as well?
Absolutely. In fact, there are some specific areas of focus as an organization. From a geographic perspective, I just mentioned Europe and Asia Pacific, right, as important areas that we will look at. From a vertical standpoint, we are underpenetrated in banking and financial services and retail. And finally, in terms of the services that we provide, data engineering is a huge opportunity. So these are 5 areas for focus. And we will be looking at using the proceeds that we got from the IPO. 1/3 of the IPO proceeds was set apart for acquisitions and inorganic growth. That coupled with the cash reserves that you mentioned just now, we will be looking at how we can use that to pursue opportunities. We already have a pipeline of opportunities that we are in conversations with. We are refining the criteria, and we want to make sure that it aligns with the growth focus that we have. So inorganic acquisitions is on the cards, and we'll be doubling down on that in the coming quarters.
Rajan, can you help us with a timeline in terms of these acquisitions, and what would be the size of this? What kind of growth do you anticipate on the inorganic basis then?
Yeah, the timeline that's provided by the IPO and the SEBI regulations is a 3-year window, but we look to accelerate that. We are really going to double down on that in the next couple of quarters. So in terms of identifying good opportunities and evaluating them, we are looking at a 6 to 12 month kind of a period. The size of the acquisition and the revenue that will add, that the acquisition will add, I cannot comment right now because it will depend on the right opportunity and what is their growth trajectory and their margin trajectory. But suffice to say that we will be looking at making a substantial acquisition at this time that contributes not only in terms of the revenue and the bottom line, but also in terms of the capability, right, that we can bring to the table.
Okay, Rajan, we'll let you go on that note. We hope to speak with you when you announce all those acquisitions as well. But